the ability to send value. I think we forget when we're so deep in the weeds, like how amazing it is that I could just send you some sats right now and it could settle like that. That's amazing. And I think we need to remember that. And then the problem, like people did diversify into other cryptos. I mean, you saw that all the time in the bull market, and you try to educate them, and it's really difficult for people to understand the differences between Bitcoin and other cryptos. But you're starting to understand that. And like you said, I did this research, and the cryptocurrencies that outperformed happen to be the very centralized ones. And talk about a flexible ledger in some of these ones where they can just print with a click of a button how many cryptos or how many of the supply they want, drive the price up, control the liquidity of these coins. But they all kind of crash down after different cycles. And I want to talk about like liquidity a little bit, because you talked about how in many ways it's a measure of acceptability, and the more widely accepted and widely something is held and used, the more liquid it becomes. Right now, Bitcoin, like in terms of the trading volumes, are really low after kind of some of these blow ups that happen with exchanges. And at this one time, you think about Bitcoin's liquidity, and you're like, it's, you can sell it whenever you want. But then you look at the volatility, which is often considered like a function of liquidity, and it's extremely volatile. Like, how do you think through Bitcoin liquidity? Do you think it's a very liquid asset? Do you think it's not a very liquid asset right now because it's still not very widely adopted across the world? If you understand what I'm saying, I'm just trying to think about how you think through Bitcoin's liquidity profile.
So liquidity over the long term is one of the most important things for money. Basically the saleability of money. Basically, money is what is most capable of being sold. So if I store my net worth in a house or a fine bottle of wine, for example, I can't quickly sell that. If I want to sell a house, I have to find somebody who wants that specific type of house, that location, that size, that age, these characteristics, that kind of thing, this school district. If I sell a fine bottle of wine, it's a little bit easier than a house, but it's like, if I want to get rid of it right away and it's worth $500, I'm probably not going to find someone that is like a wine connoisseur that is willing to understand the full price and pay it. I'd have to find like a specialist wine shop to be able to kind of take that off my hands at what is the fair price for it. Otherwise, I have to sell at a major discount. Similarly, when I go back to the United States, I bring some Egyptian currency with me. Usually I bring a little bit back from wherever I go. So I have Norwegian currency, Thai currency, Egyptian currency, a bunch of little currencies sitting in my drawer. And if I were to go out in New Jersey and try to spend those, they're not saleable goods. I'd have to find there are a handful of banks that can take them off my hands, generally for like a discount. If I try to exchange them with a normal person, they're probably gonna, if I find anyone to accept them, it's gonna be for a massive discount. And so they're not very liquid in the global sense outside of their own jurisdictions. And what money solves is money is basically the most liquid good. So back in the day, it was gold and silver. There's specific tools or specific, like a horse or a house. Like all these less liquid, more specific goods and services. And then you have gold and silver, which everybody wants more of. It's money, and even people that don't want to use it can know that they can get it off their hands pretty quickly. And dollars serve that role, and Bitcoin serves that role, but it is a matter of degrees. And so right now, the most liquid money in the world is the dollar. Bitcoin's remarkable in the sense that in a global scale, it's already one of the most liquid, especially, it doesn't have like a central jurisdiction in the way that, the Norwegian kroner does or the Egyptian pound does. But when you think, okay, what are the top 10 monies I would want to bring with me, bare assets globally? Bitcoin's not number one, but it's in the top 10, right? So it's behind dollars, euros, and a gold coin. But it's higher than like 140 fiat currency probably, where you could find an ATM or a meetup or basically most urban centers in the world, there's a reasonable way to get Bitcoin exchanged into the local currency or for goods and services or something. It's one of the more saleable ones. But that's a process. And so when Bitcoin was in its early days, it was rather illiquid. If the trading volume is millions of dollars worth of Bitcoin per day, and you're a billionaire, or you're someone, or you're an institution that wants to allocate hundreds of millions of dollars to it, you can't. I mean, you can do it very slowly over time, but then the concern is if you ever want to sell it, you're not going to be able to sell it quickly. You have to move out of it. And so if your thesis ever changes, you're in trouble. You're not going to be able to get out quickly without moving the price. And so in any given era, Bitcoin can only absorb certain types of buyers, right? So why doesn't a sovereign bond, like a sovereign wealth fund, just YOLO into Bitcoin. And it's well because there's liquidity constraints. They can only get in so quickly without moving the price. And should they ever want to tap into that liquidity, it's not nearly as liquid as dollars or gold market, for example. So they're going to have a tough time getting out of it quickly should they need to. So at any given level of adoption, there's only certain sizes of buyers that can realistically, meaningfully allocate to it. So, in 2011, Bitcoin was not ready for Michael Saylor, for example. And, in this era, Bitcoin is not necessarily ready for like $1 trillion market, $1 trillion entity that wants to put, $15 billion into it and be able to get that in and out quickly without thinking about it, right? So there are certain sizes that it has to reach before it can even attract certain buyers. So on one hand, that's bullish. That's part of why it can only monetize so quickly, and tells us that, the question is, who's going to buy Bitcoin at $250,000 per Bitcoin? Well, central banks and sovereign wealth funds and pools of capital that right now consider it too illiquid for their massive size. That's kind of the entities that it would start to enter their radar only at that level. So on one hand, that's a bullish case. On the other hand, that is one of the realistic limitations of Bitcoin right now, is that it's not as saleable for the most part as dollars or euros or gold coins even, and because it's still a smaller, newer asset. And I think that's one of the kind of the nitpicks I would have with people who say, Bitcoin's not volatile, everything else is volatile relative to Bitcoin. It's like, well, sure, the rules aren't changing for Bitcoin, but it's Bitcoin is the less liquid, less saleable good than many other things. And the purchasing power of Bitcoin does change pretty rapidly in a short period of time compared to more liquid networks like the dollar or the gold market or the euro or even the yen. And so you have these other monies that are, they're currently larger, more liquid, more stable. And I think over the long run, Bitcoin is monetizing to get to that level. But it takes time. And right now, bull markets are quite liquid. Bear markets are less liquid. But this bear market is still generally more liquid than 2 bear markets ago, right? So if you look at kind of a 5+ year time horizon, the market is getting more liquid over time. It's certainly more liquid than its peers. And the only things that really compete in liquidity are stable coins, but they're a type of credit. So going back to our prior point about the abstraction of money and the necessity of credit to make that abstraction happen, stable coins are a type of abstraction and credit, which is it's fine. It's a new type of credit, which is serving as a certain role in, say, if you're Argentinian and you want to access dollars, and this makes it easier for you, is at least an option. But basically, what's remarkable about Bitcoin is that it's a non-credit based fast bearer asset, and the world is slowly realizing it and testing it and saying, well, what if we try to forcibly increase the block size? Or what if we try to forcibly pass a hard fork or a soft fork? Or what if this bug's introduced, or things like that? It's slowly over time going through different tests and meeting new levels of liquidity.